Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Yeah, Rick, let's run through three of them real quick. And the reason I want to show just a couple of things that I'm noticing this. So let's start with the YUK and just very quickly take a look that we've been in a downtrend. I'm looking at a 100-day chart here. And notice that we've got a pivot point down here at the bottom here. Yeah, we're okay with 180 is fine too. So take a look that we do have a pivot point down here and that we're coming to the upside. But right now it looks like, well, let's just keep that in mind because I want to contrast this to, take a look at the $ AUX. And I want to show the difference here. Because if we are going to take a reversal trade, let's just say, notice the difference in, I guess you'd say, the momentum of the YUK versus the AUX. So down here we have a much stronger pivot point and a much taller candle that closed much closer to its high point for the day. So if you had to take a trade, if these were the only two trades out there, which one would you take to the bull side? Would you take something that looked relatively weak as far as the pivot goes, or switching back over again to the AUX, would you take something that's looking relatively strong? I'd take something looking relatively strong, because what I'm trying to answer here is who's controlling this thing? Are the buyers controlling this thing, or are the sellers? Now, for those of you that want to be a little bit, go with this overall trend right now, this could be a good opportunity to jump in on a put trade versus a call trade, so a bear strategy instead of a bull strategy. Well, there would be more opportunity here in the AUX, but then again, now you're going against those buyers that had this candle drive up so strong today. So, Rick, I wanted to compare all three. So we took a look at AUX, we took a look at YUK, and now let's look at $EUI as well before we get into the nitty-gritty of the candles.
There you go.
Okay, I'm still looking at a shadow of your Qs, actually, is what I'm looking at here.
Okay, just a slight lag in there. Okay. EUI ought to be coming up any second now.
All right, I'll keep my fingers crossed here. I'm on a pretty slow connection. Nope, try a refresh. Try to refresh.
Still lagging. Okay, here, let me go ahead and refresh that there for you. All right.
Yeah, it was going really good there for a while. Okay, now... okay, there we go. Now I'm looking at it. Wow, okay. So switch that guy to the $EUI, and let's take a look as well.
Okay, do you want to look at the chart or the options on that?
No, want to look at the chart. So you got it. Okay. So what I wanted to compare here was I wanted to compare the YUK. Now, it's very, very tempting to take a bull trade on the yen right now because the yen has never been this strong against the dollar, and the idea here is that something has to give. The Bank of Japan's got to come in and threaten some more intervention and possibly bring this thing up a little bit. Or you could go with more of this Aussie trade and this Euro trade, which to me, from a technical point of view, look to be the stronger trades, but I think the pure speculative one would be the YUK. Now, Rick, do you want to dive down a little bit further? One of the things that bothers me sometimes when we'll go do some live events is people will take a trade based on just one candle. Yeah. One candle does not in and of itself make a trade. We want to see some confirmation. I'd be looking for confirmation, of course, tomorrow in both the EUI and in the AUX. YUK, not quite as much. It just didn't seem to be there today. Certainly closing more to the low end than to the high end as well.
Yeah, absolutely right. And something else, since we've got the EUI up here that I'd want to point out, Shawn, I'm going to draw another line right here, and it's going to be, I'm going to adjust this a little bit, but let me go ahead and just make this adjustment slightly, and then I'll just change the color to, say, a bright blue so it stands out a little bit different. And notice this line right here. Now, when you go to make a trade, one thing that you want to be aware of is not just how to manage risk, what is your downside, but you really ought to be have a good, in some sense, of what your possible upside is. Now, remember we talked about the role reversal. Notice how in EUI back here in early August, how it dropped down and found a support level just below 76, ran up a little bit, did a little bit of a double top, and then dropped back down. It hit that support level again, and then let's take a look at the days so that I give you the exact day. It hit that support level on September 21st. Now, interesting thing, after that, it gapped down. When it finally broke, when it hit that support level and broke through, it gapped down. That tells us that that support level was broken with a lot of momentum. Now, here's what we're looking at. It has now dropped down to this current, most recent support level around 71 and is working its way back up. Now, if we were to take this trade right now, protecting ourselves would be a function of placing our stop order somewhere below 71. I would put it somewhere in the low 70s. But it begs the question, what would be a reasonable target for profit on a trade like this? Let's say I would take a long call position on dollar EUI, on the U.S. dollar against the euro. Well, a reasonable profit target would be this line, which was support previously. It would become a role reversal if it were to hit resistance. Now, that's just below 76, and an interesting thing that's happening is converging on that line are our moving averages. So we've got kind of a, if you will, sort of a perfect storm forming here. We not only have a possible role reversal setting up, but it's occurring at the same price where our moving averages are converging on, and that should add to the strength of resistance. So if this does continue to go up, when it gets somewhere around 76, high 75s, we would expect, from a technical perspective, we would expect this currency pair to start meeting some pretty significant resistance. So as a trader, this is the kind of technical information that you have to be aware of, because if you do take a long call position, as it gets up around 76, you either need to take profits or certainly be prepared to protect your position very tightly.
And Len just had a nice point, too. So he suggests drawing some Fibonacci levels as some targets, and that's another way that you could do it.
Sure.
For the sake of keeping everything simple, just taking a look at support and resistance gives us a general approach of about a 4-point to the upside and about a 2-point to the downside. If I were to take this trade as a bull trader, I would go ahead and take a call option, and I would take a call option that is going to be deeper in the money here, so I'd be looking down here at about the 70 price level. I'd be taking that because of a couple things. Well, one, I'm going to be paying lower in theta, so I'm not going to be paying a lot for time for those option traders out there, you know what I mean. But I'm also going to have a higher delta. You see, I don't want to pick one that is at the money. If I pick an at the money, I'm going to have basically, I'm going to be getting about a 0.5 delta here. So for every buck that it moves, I'm only going to get 50 cents. And if there's only 4 points to the upside, well, I'm only going to make about $2 on that trade. Now, also, one of the things that we find that people make a lot of mistakes on is they don't get enough time. They don't buy themselves enough time. If I think this move is going to happen in the next 30 days or so, which is the next option expiration, I ought not take the next month. I ought not take that November expiration because I'm going to be paying pretty heavily for that. If I think it's going to happen, let's say, in the next month, then I really need to go out to about January. I need to take a January option because even though I don't intend to hold on to it for the full 3 months, the point is I'm going to be getting more value. So I would be looking, if I were to take this as a trade, at an in-the-money option with a delta typically of about 0.7 or 0.8, and that puts me in here at about, what do we got there, Rick, the 70, which would be a pretty nice level. The nice thing that I like about doing the 69 or the 70 is if I'm wrong and it goes down to those levels, sure, I've given up some intrinsic value, but I can close the position out. I can salvage what remaining theta is left of my 3-month contract. Admit that I was wrong, take my lumps, lose a little money, salvage what I can, move on to the next trade.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.